Boom! Every day, it seems like we are experiencing another economic bombshell. It feels like we're walking through an economic minefield, scared to take another step. One of the most compelling reasons to own precious metals is their reputation as safe havens in times of sudden crisis. Right now, we are experiencing a textbook example of that safe haven dynamic in motion. As concerns soar over instability in the banking system, gold and silver are soaring right along with it. 2 weeks ago, Silicon Valley Bank was the subject of the largest U.S. bank failure since the financial crisis, and the second largest bank failure in American history. Just 2 days later, Signature Bank of New York was consumed by the third largest bank failure in U.S. history. Then, just 3 days after the collapse of Signature Bank, shares of Credit Suisse, one of the world's too-big-to-fail banks, plunged on the news of irregularities in its financial reporting. A crisis of confidence is sweeping across the global financial system. As it does, gold and silver are showing their qualities as safe havens and helping protect retirement savers who own them. In the tumultuous week that followed Silicon Valley's collapse, gold jumped nearly 10%, approaching nearly $2,000 per ounce, and silver soared close to 13%. These sudden price surges are the latest examples of gold and silver's potential to serve retirement savers as safe havens, a feature readily acknowledged by analysts. Bart Melek, Chief of Commodity Strategy at TD Securities, is one of those analysts. Against the backdrop of this current banking turmoil, Melek recently told CNBC that gold looks very much like it's fulfilling its mandate as a safe haven. Melek added that a lot of investors are looking to the precious metal space as a safe haven against this volatility and this risk, and it appears they are being rewarded for doing so. But what will happen to the price of gold and silver if confidence in the banking system is restored? Will gold and silver give back their recent gains? I don't think so. This critical period of uncertainty may lead to big changes in monetary policy, changes that could be very favorable for metals. Signs are growing that banks simply cannot tolerate a tight rate environment. Moody's Investor Services just downgraded its outlook on the U.S. banking system from stable to negative. And according to the data from the Federal Reserve, for the week that ended March 15th, banks borrowed a record high $152.8 billion from the central bank's discount window to increase their liquidity. That's nearly 40% more than the previous all-time high, $111 billion borrowed during the 2008 financial crisis. Banking system stress could mean a shift back to loose monetary policy is looming. If that happens, precious metals could soar much higher from here. On that note, Mike McGlone, senior macro strategist at Bloomberg Intelligence, is convinced that the banking crisis is part of the economic ebbing tide. And what does he think that means for gold? Conditions seem ample for gold to head to $3,000. Of course, no one knows what lies ahead, But this much is clear. Right before our eyes, both gold and silver are, as TD Securities' chief commodities strategist puts it, fulfilling their mandates as safe havens. As precious metals fulfill their role as safe havens, we are reminded once again that through history, when concerns have grown that something really bad is about to happen, gold and silver often have stood tall. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.